Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day as always. Today, we're going to be talking about Alphabet, and they just reported earnings. I just did a video on Amazon. You can check it out. I recently started publishing videos again. Thankfully, I found a good way to do it around my schedule. So it's been a very long time. I think the last one before the video I posted yesterday, if you don't count the live streams, was the FMC video from way back when earlier this year. So here we are. Alphabet. This is, of course, longtime holding of mine. We'll talk a little bit about how I positioned myself recently, as in what I did new to the position. And then we'll talk towards the end of the video if I'm doing anything after this earning. So no secret, the market is really excited about this one. So we saw a really strong reaction after hours, 5.8% up. We'll talk in detail about some of the results here in a minute, but let's talk about a little bit of the story with Alphabet. So if you guys recall, of course, we know what happened in 2022. Everyone hated all of these companies. They're not able to produce any cash flows, but a lot of this scare started to develop earlier or end of last year, so Q4 or Q1 of this year. So between that time period, there was a lot of fear, uncertainty around all these LLMs that were going to come in and destroy the most profitable business on the planet, well, at least for Google, but arguably one of the most profitable businesses on the planet being Google Search. So fast forward to today, that's still top of people's minds. A lot of people are concerned about the change in nature of behavior of how people interact with information on the internet, whether it's a Google search or one of these large language models that you interact with and ask it questions, and then it gives you some sort of answer. So that's still up for debate. I think I'm not going to convince you either way, one way or the other. People have pretty much made their minds up on that. But let's talk about some of the other businesses that I think are, let's say, less contentious. But what I'm trying to point out is Google is kind of a contentious name, believe it or not. So in these details, and if I'm looking over to my right during this video, because remember, I do record these live. I do not edit my videos. I just do one take. I'm just looking at my notes so that I make sure I cover all the points that I wanted to cover with you guys. So some of the specific updates, and we'll go over to their press release here. And let me make sure I zoom in for you guys who are watching in the recording. If we look at some of this, we see the consolidated revenue increase of 15 to 16%. Google services increased 13%. Cloud, okay, let's talk a little bit about cloud here. It grew 35%. This is a reacceleration in one of the more important lines of business for Google. Why is it so important? Well, we know that hyperscalers, Google, Microsoft, AWS, the cloud business is a very profitable business. And when we talked about Amazon yesterday and what we're looking forward to for those earnings, one of the things we talked about was AWS in particular. So here we have Google Cloud, which is the smaller of the three, and they have, or they should have, the highest level of growth. There was some concerns in the prior quarters that growth had been decelerating for Google Cloud. Now, what do we have here? We have reconfirmation, a second quarter in a row where growth seems to be continuing to do strong. So now on a going forward basis, we want to make sure that this is not like a one-time thing, that this is going to be a continued trend. When we look at the, let's call accelerated compute, that maybe that's a better way of calling it AI spend, because I feel like the word AI has gotten, it's polarized people. People have their opinions already set on what AI spend is. So I think to bring everyone to the conversation, let's call it accelerated compute, right? And so it's about producing this compute capacity that will one day, or is being used in some way today. A lot of that is the CapEx investment that we're seeing. And that's another item that we don't have it right here in front of us, but it's in here. What they stated in the earnings call is that they're going to maintain the CapEx spend for the rest of this year, but following in 2025, we're going to get an increase. Now, why is that important? Well, if you have any adjacent plays that benefit from that CapEx spend, good for you, because you should do well, and of which I have a lot of exposure to. A lot of people think of, what comes to mind is NVIDIA, but there are plenty of other picks and shovels plays that will do and should do well in that environment. So we also learned about more information. Well, I think we've been learning information all along the way, but we just keep hearing it over and over again. One of the things that people are paying attention to with developments in Alphabet is, of course, their TPUs. Their TPUs, that's their own silicon, their custom silicon, that eventually, in theory, they will be able to mitigate some of the cost increases with a lot of this CapEx for this accelerated compute. In theory, at some point in the future, this silicon will be very, very, very competitive with the likes of what currently is offered by NVIDIA. And arguably, by some accounts, it is already comparable or very competitive in some tasks, but not all tasks, like current silicon from NVIDIA. So the margin expansion is also something I think the market really took liking to. So if you look at that the fourth bullet point there, operating income increased 34%, operating margin percent expanded by 4.5% points to 32%, and the net income increased to 34%, EPS increase of 37%. So you can see that the earnings per share increased faster than net income because, of course, share buybacks. But the margin expansion is what really, I think, excited a lot of investors. And again, when we recall, the market actually was, obviously very excited after hours. So what we'll see in let's say the coming days is how sustainable this is. And I would like to see what Meta says tomorrow in their earnings report. But this is moving everyone because there's also some positivity about digital ad spend. And if we look at some of the other points that I wanted to cover, which is the other bets segment. Well, what is other bets? Inside other bets, you have Waymo. Waymo, this business that is doing what Tesla claims they will one day do. They're doing it now. Of course, we kind of have to value this almost as a zero, because just like how we have Project Kuiper at Amazon, with Waymo, I don't really assign any value to it, but it could be something big one day in the future. And with that, there's a lot of things that still, of course, like questions have to be answered as far as regulatory approvals and the like. When we look at something like a Tesla, that's some of the questions I always levy to Tesla bulls. Is like, well, LiDAR versus, just normal image sensing cameras. What are regulators going to allow? Because even if you argue or make an argument, at the end of the day, it has to pass whatever the regulators say. So I think with Waymo, they're going in that right direction. And the whole argument that it's too expensive to equip LiDAR, I think that argument was very surface level, because when you talk to engineers, it's always when you take a product from the very let's call it small and limited scope of when you're testing it, prototype phase, to now you're building it at scale. Of course, the costs come down, and a lot of people are making those criticisms a little bit too early, in my view. All right, so what is it looking going forward? So when I did evaluation on Alphabet, I'll show you guys here the outputs that I came up with. Let me make sure you guys can see this. So when I did the evaluation Alphabet, I came out with these following outcomes. And you can see that actually we were recently in that channel right between the bottom two scenarios where I'm a bit more conservative. And actually that was a good time to add to Alphabet. And then it didn't stay there for very long. Arguably, there were other positions someone could have bought and would have done a little bit better. But when we started building out or adding to the position this time around, I actually went around and did a synthetic covered call. It's not a synthetic covered call, but talking too much about yield max these days. A synthetic long. So synthetic long is, simply put, you do two legs. One is selling puts, and then you purchase calls. You typically it's at the same duration and same strike as the standard way of doing it. Then you can do it like a bastardized synthetic call. There, I said it again, synthetic long, and that's the way I went about it. So if you're curious and you want to learn more, let me know during a live stream, and I can kind of walk you through that. But yeah, so in theory, I should be in a very good position. Or they were already appreciated, but I should be in a better position as we kind of continue. And then, of course, in my personal holdings, I have the common stock as well. So overall, the position should be fairly happy. The common stock, I mean, it's been a ride, so it's nothing new to see this volatility, but the options in particular should do actually really well tomorrow. And then, of course, if the club members, you guys are watching, you guys are already familiar with that position that we have. So all that to be said, what am I doing with the position? Nothing at this point. If anything, I'd try to be kind of buying some more leaps here and there, adding to the position. I think all we got here is thesis confirmation. And then in this case, we don't like to punish a winner. If it was something that we were really worried about, sure. And then what are some of the things we would be worried about if we really do start to see changes in behavior from the consumer? And that's actually one of the tests that we want to, kind of hold to a standard. We want to see, are people truly changing their behavior? Because right now, remember, people kind of go out of their way to even install the search engine or the Chrome browser on their computers. They don't want to use the other stuff. So a lot of people go out of their way to do that. And then of course there's the question of how does the lawsuit with, you know, them being the default browser or the default search engine on iPhone change that behavior? Will that affect behavior? How does that look? Who's going to replace them? There are some questions. I'm not going to sit here and say to you there are no concerns. There are legitimate concerns with Alphabet. That's why it's cheap. There is a legitimate debate happening online about the valuation of Alphabet, but in there lies the opportunity, because if those concerns are met with nothing, then hey, you should have a company that could do very well. And depending on how you've positioned yourself, you could do even better. Just really depends on that. So those are my thoughts with Alphabet. Overall, fantastic company. Current price, I think, is a fair price. I wouldn't say it's a screaming undervalued buy, but it is a fair price. It is a fair price to pay. But am I buying more common stock? No. If I was to buy more, I would purchase more Leaps. And then it actually, in any case, let me get I can show you guys the position. I wanted to show you guys the position real quick before we close off the video. So this is what it looks like, right? So you have, in this case for me, I have two legs that are the long position on the calls. So this does not cap my upside. And then I have the puts at the bottom. You can see there the negative sign simply means those are sold puts. And so in theory, if this works in my favor, then the puts will be worthless, the calls will be worth something, and then that's how you more or less or what you're really looking at. So I'm really excited to see what happens tomorrow. And of course, this is pricing as of the close of today. So again, the date was 10/29/2024. So when you're watching this, should be the 30th. And today you're going to be freaking out mostly about Meta, because Meta is going to be reporting. So who knows what that's going to bring. But I'll be doing a video on Meta as well. That should be exciting. That's going to be the most material business in my portfolio, or at least at the very least among them. But for sure, it's number one most material. So with that being said, guys, thank you guys so much for watching. I hope you guys enjoyed the video. Feel free to comment down below if you enjoyed the video. Let me know your thoughts. You like Google, hate Google. If you're not subscribed, go ahead and subscribe. Again, if you liked the video, go ahead and feel free. That really helps out the channel. And if you want to and you're curious to join the club, you can look at the description below. There's a link there. You know, it's a great community. You can see how I manage my portfolio, 1.7 or some odd $1 million. And then, yeah, we'll have tons of fun there and share ideas. With that being said, thank you guys so much for joining in today, and I'll see you guys on the next one.